Yo, what is good, everybody? In today's video, I'm going to be going over how I find my daily bias in the form of ERL and IRL, and IRL to ERL, vice versa. Jumping in, this is how obviously you're going to build a concept of market maker buy models and sell models, but I'll cover that later on in the video. So, what exactly is IRL and ERL? You have to first understand two things. The market moves in two ways. Number one, seeks liquidity. Number one, seeks liquidity in the form of old highs / lows. Draws, obviously it's draws, well, seeks liquidity in the form of old highs and old lows. Number two, rebalance, imbalances. So obviously just fair value gaps. Really that simple, bro, not gonna lie. Okay, so obviously identify them as fair value gaps. So ERL is external liquidity. External. So this obviously will cover old highs and lows. The way you guys identify this on the chart, take a look here. Swing low is this movement down. Hold on. Is this obviously this movement down and a movement up. Where the middle candle is just higher than the candle on the left and the right, which will be formed in the swing low, as well as the registration here printing a wick. Swing highs, obviously, same thing. It's just candle is just higher than the candle to the left and the right of it. Simple. How does this concept work? So IRL is the main thing. It stands for internal liquidity. Seeks to rebalance imbalances to then reach into external liquidity. It's just in the form of fair value gaps, but such as obviously IRL, you guys could look at this as obviously order blocks, breaker blocks, but that just gives you guys more confusion in my opinion. Honestly, you guys don't need that. You just need imbalances. So how does the concept work? So you have to expect when external liquidity is taken, then market would then form it into IRL, so you can obviously fair value gap and vice versa. So obviously this is the example. As you guys can see here, we take out all of this external liquidity. You guys can see here. We expect price trade back into external liquidity, which is this imbalance here, because market has to rebalance imbalances. So in order for us to efficiently deliver price higher, we want to see us trade lower to then trade higher, take out all of this external liquidity above. I'll remove these. So yeah, we take out all these swing highs above. So we obviously, the way I look at it is we expect price from external liquidity to internal, trading back to then trade back into this external liquidity here. Like this. Printed in a wick, manipulation. Trade lower, we say trade lower, take out all the sell stops below back into this void here to the left of us as well. Getting fair value. Get heavy displacement out of this manipulation, because it's kind of like accumulation, manipulation. Now we're in a distribution phase to trade this back into internal liquidity, which we do so here. That's basically it. There's really not that much to it. Just don't overcomplicate it, honestly. That's what a lot of gurus do. Obviously, market then trades back into internal liquidity from IRL to external IRL to ERL and ERL to IRL. But this is how I find my how I find my daily bias in a higher time frame. But yeah, this is obviously how I find my time frame bias. You really don't need anything. It's just simple. It's as simple as IRL to ERL and ERL to IRL. This is obviously using a higher time frame context to then obviously change back to a lower time frame, just from 15 minute, 5 minute for my entry. But I like how I use this because what I've been using this is 72% win rate, in my opinion. Obviously, how you build context. That's how you build your bias when you're going in for the day. We go over market make buy models, sell models. So this is the concepts, IRL and ERL. Okay, look, in the first scenario, I'm going to cover from internal liquidity to ERL, IRL to ERL. This is how the market moves. The market first has to take out external liquidity, which is obviously in the form of swing highs, to then trade back into IRL, which in the first example, that's what I showed. And then trade back into the IRL, giving us a market maker buy model on a lower time frame, giving us entry to then trade back into ERL. So it's from IRL to ERL to ERL. Simple as that. Second scenario is ERL to IRL. You see here we do trade lower, takes out old swing low in the form of a swing low basically. Generate a lower time frame buy model, trade back into this IRL in the form of fair value gap basically. Price obviously has to rebalance imbalances going from external range to internal range liquidity basically. Second frame, whoa. In this scenario here, we're gonna make sell models. We're going from ERL to IRL in the second framework. In this scenario, as you guys can see, it's obviously done when market takes out all of these old highs, which is obviously ERL. It generates more liquidity on the lower time frame, giving us a bearish entry trigger to then trade back into IRL, which is the imbalance, which is IFGCIZ, to then trade lower from ERL to IRL. Same thing here as well. From the way I like to trade, from IRL to ERL. We obviously form market maker sell model here. We take out all of this external liquidity here, going back into internal liquidity, then targeting new obviously swing low, external liquidity. Obviously we're moving from our fair value gap all the way to our swing low. The way I like to trade is obviously is capitalized from IRL to ERL. So this sell model here and this market maker buy model. Taking continuation trades basically. Taking high probability setups, in my opinion, which are from 1 to 1. So this is how the framework is. I'm gonna give you guys more examples on how to solidify these concepts. Really easy. So this is how the example panned out, but looking on a higher time frame, you guys have to really look at what is the market really doing on a higher time frame. Let this load. What are we generating? Are we in equilibrium? As well as that's what I want to cover as well. This is very, very important. Anchoring your fib from high to the low. Obviously, this is not how you're supposed to do it, but anchoring those and getting CE, which is obviously the range of the equilibrium. So basically, this is how it is. Wrong one. Fib 2. Obviously, you get it from your high to the low. High to the low. Here. The way you look at it is true opens as well, pairing true opens, but I'm not going to get into that. That's for a different video. Anchoring your fib is very important. It gives you more of a narrative, a context of where price is and where price would want to trade into. So obviously, you see how market then traded into a discount range, which is obviously if we're in discount range and we're bullish, we're looking for longs in a discount range. It gives us more high probability of us targeting ERL because we're trading from IRL to ERL. That is the way I trade. So we do trade obviously back into the discount range, giving us fair value, giving the market time to trade into and giving them fair price for them to put in more orders in their favor to push price. You guys obviously do see this here. We do have a nice down close candle, which is the order block here. Trade into it. As well, I do like to use the mean threshold order block as well. Respect the mean threshold order block. As well as heavy displacement as well. Trading obviously back into ERL. This is obviously basically it. Obviously, I like to use QT cycles as well, and true opens. But the main thing I really want to cover is, look, this is obviously the 4 things people would never tell you. Number 1, obviously market hunts liquidity. Liquidity. Number 2, rebalance, EQ. Number 3, rebalance. Whoa. Sorry, rebalance inefficiencies. In the form of obviously imbalances. That's what I obviously mean. Number 4, most important, is generate liquidity. Whoa, my spelling is crazy. Yeah, that's it. That's basically it, though. You really have to look at that on a higher time frame basis. And please, really take your time. You guys have any questions? DM me. The Discord is open, and I would love to help anybody in need, for real. Like, I don't mind helping at all. So, see you guys tomorrow. Peace.